Hello viewers, we are going to share our views around US Fed Reserve's monetary policies and Reserve Bank of India. Rising US dollar demand globally against its supply reflects that US economic fundamentals are far stronger than the economies of the world in the midst of global supply constraint. But in present economic scenario, the economic theory says that monetary policies have become ineffective in counteracting the price rise globally. So not only Reserve Bank of India, but also even the US Fed Reserve have misread the stronger consumers' demand concept to remain a blind follower of supply-side driven economic growth model by pushing back the demand-side driven economic growth model. That's why inflation had increased even after increasing the interest rate continuously. Here, since last 3 years, we all have seen that money printing had increased enormously almost all countries of the world, where Fed Reserve has printed dollar more above to 30% of the dollar in circulation. In the same way, Reserve Bank of India has also printed rupee massively from rupees 17.9 lakh crores at the time of demonetization of November 2016 to around rupees 31 lakh crores by the end of October 2022. And this expansion of printing of money has become over and above to 75% of the rupee in circulation. So, in the context of India, the stronger consumers' demand along with the rising cost of production have played important role in increasing inflation rate. And all these have increased not only inflation but unemployment level, lowered credit growth rate, lowered income and lowered purchasing power. Here in this scenario, all these have impacted adversely on or dampened dampening impact on investment, consumption and credit growth rate. In the midst of higher unemployment, lower income, lower purchasing power, lower credit growth rate. And it has brought lower GDP growth rate along with economic and financial disruption in Indian economy. Here, a stronger US dollar, Fed rate hikes and tighter global financing position or situation in global level have forced the Indian economy to increase its borrowing level, to increase its debt level massively. And in the midst of financial instability, lower purchasing power, lower income. That's why it has thrown little room, or it has left little room for maneuvering of weaker micro and weaker macroeconomic fundamentals of Indian economy. In this situation, the financial stability has gone down, where the credit growth rate has become lower, where GDP growth rate has also become lower. In this situation, the tighter monetary policy of RBI, along with tighter fiscal policies of Government of India, have brought not only financial instability but also brought rupee depreciation, declining forex reserve, rising unemployment level, rising inflation, rising fiscal deficit, rising current account deficit, rising unemployment level, rising banks, NPAs out of politically connected lendings. This is the situation. And so, the need of hour for Reserve Bank of India is to follow its own course of monetary policies, or to chalk out its own monetary policies rather than following the footprints of global economic peers. In the midst of lower income, lower credit growth rate, lower GDP growth rate, lower purchasing power, and to increase the employment level, to increase the credit growth rate, and to increase the purchasing power of vast consumers, it is essential to re-accept the demand-side driven economic growth model by Reserve Bank of India. Further, we have seen that Reserve Bank of India's monetary policy has become ineffective in controlling and reining inflation rate, along with raising economic growth. That's why RBI's autonomy and credibility has been put at stake within the shadow of political pressure. Here, the RBI should follow the path of demand-side driven economic growth, which is possible if RBI adopts the policy of increasing income level, increasing purchasing power, increasing employment level for vast consumers, for vast workers. Here, there is also a need of increasing democratization of credit facilities for vast youths to give them employment, to give them jobs for or to increase their income, to increase their purchasing power, so that the GDP growth rate should increase, where purchasing power will increase. And in this context, the financial stability will become better. In the midst of financial instability, out of wrong monetary policies adoption by sidelining the demand side driven economic growth model. This is the situation. So in this situation, not only US Fed Reserve, but even Reserve Bank of India should pay attention towards the stronger consumers' demand, so that in the present rising inflation, the situation should be controlled, or inflation levels should be brought down by increasing the consumption demand of vast consumers. This is the economic situation, and global monetary policies makers should pay attention toward these things. Thanks a lot of thanks to my viewers.